Hey everybody, this is Jose from the bottom right side of your screen as always. A quick sound check before we get started. We will be starting the session in around 50 plus seconds. Let's use this time to have a quick sound check. Normally the protocol is to just send a quick hello message in the chat box, and that way I know you hear me, and therefore we know sound is good and we are ready to get started on time. So please go ahead and do that. How are you, Mark? Good to see you. Very nice. So we are 30 seconds away from getting started. Almost there. Perfect. Joe, how are you, my friend? It's good to see you as well. Good to see you all. By the way, Mark, I did email you earlier in the day. You may have seen it. If you haven't, please check your inbox when you have a moment. Very good. That's it. We just hit the top of the hour, so it's time to get started. Welcome to the session, everybody. Today is March 10, 2022. This is Options with Options. So we're going to be looking at the markets, obviously, ready to trade options. My name is Jose Blasco. Not sure I said it. My email address is on the screen, as you can see. So if you need to contact me for anything, feel free to email me, even though I will mention the question page in a moment, which is kind of like our favorite place where to communicate when it comes to technical questions. I am highlighting the disclaimer on the upper left side of the screen. So please read it carefully. It is fairly short. I am counting on you to read it completely because it is an important piece of information since trading carries risk. And I want to make sure everybody is well informed. Agenda, we're going to be looking at the market, review the trades, and from there look at other trade opportunities that may be available in the market. We'll plan those trades, and assuming they meet our rules, we'll simply go ahead and execute them. So hopefully we can do all of that in today's Thursday session. We have little to review, as you will see in a moment, and therefore we should be able to focus on new trades today. Before we start the session, I also want to mention something else, which has to do with a conversation I've been having with Joe, which is with us as well today. So I'm going to share that in just a moment. But also, as we begin, I wanted to highlight, as always, our question page. For the ones of you that you are regulars in the sessions, you know this by heart. For the ones of you who are new to the sessions, this is an important place for you to find questions and most importantly find answers by typing on search questions. You can also log in and then type your own questions, attach screenshots of your charts and things of that sort, and this would basically help our support team to respond to you while we make it visible to the community, and therefore it becomes helpful for everyone. So it's probably the best way to do it, unless you have a question which is very personal or you don't feel comfortable, and then of course feel free to send an email to us. Cool. Okay, so with that said, and as we are ready to jump into top, okay, which I have it here ready to go, before we get started, there is one additional comment I would like to make. Just give me a second, guys. I was having a little issue with finding what I wanted. Here we go. Okay, so I'm just bringing a browser to the main screen so I can show you something just to consult with you guys if you think it's a good idea or not, and that could be helpful or not. So we take it or we leave it or we think of something else. This is a website called Stock Tweets, which you guys may be aware of. It is a fairly known website in the world of investors. And inside stocktweets.com, which you could create your username just like any social media portal, we also have our stocktweet.com/predictive, which is our own page where every day we post a little bit of information here, even though we are not doing anything too magic or anything like that here. We do add some information every day. Okay. Now, beyond this particular thread, which looks very similar to Twitter, if you wish, that's why this is called Stock Tweet. We have also created a room, which we call it the UFO Trader Room, which is a room that looks like this, where you guys can go ahead and post. Okay, you can join the room, and the moment you click on join and you join the room, of course, now we only have 2 members. Okay, so we haven't started using this yet, if you wish. But the idea would be that if you guys feel that this could be useful as a tool for you to interact and communicate with each other, so the idea would be that you click. How are you, Jeff? You click in here, you join, and then you can do posts such as what Joe did here, where he had a post example where he posted something, and notice that the moment he posts something, you guys can now go ahead here and continue the conversation and click on bullish or bearish and upload images as well and things of that sort, which allows you to share trades, comment on trade setups. And I believe this could be an interesting place where to do this. But again, I will certainly like to get your opinion, get your feel for it. In one hand, I was thinking to have a tool of this sort built in our website, but at the same time, I think that if we make it a bit more open, it may be more useful as a community tool. So again, I love you guys to take a look when you have a moment. I will share on the chat box what the link is. I just share it there. You can see it here as well if I zoom in. Okay, so stocktweets.com/r for room/UFO traders. And you guys feel free to take a look, and maybe you post something as an example and see how you feel about it. And again, no one is looking at this yet. We are 2 members only. So it's okay to post whatever, even if you make mistakes or it's just a test example that you post. Is not even something important to you, just to see how it works. Okay, so I'd like to suggest that you guys experience with it, and therefore in the future, in a future session, I can ask for your feedback. You may like it, you may not like it, you may have tried already and you don't like it. So any feedback you may have now, or any feedback that you have to share in the future, that would be great if you could comment, so we know if we want to really focus on this tool or it's better to build something different. Okay, so please go ahead and give me your first impression, if you don't mind, on the chat box. And beyond the first impression, when you test it, when you use it, certainly I'd like to know more of the details. Okay, but anyway, time to trade. So while I'll be reading that first impression, in case you didn't know this tool, we are now going to begin our market analysis. So I'll take a sip of water and we go. Cool. Okay. So let's do a little bit of market analysis. Okay, and I'm going to start with VIX. Okay, just to make a very simple comment here, we are still trading at 32.71 VIX. So VIX is high, right? I guess we all know as options traders that that if you look at a monthly time frame of the VIX, okay, I'll do this very quickly. So sorry, yes, there is no data on this time frame particularly. So if you look at a weekly time frame of the VIX, in 2017, for example, we were talking about VIXs of 10. In the middle of the 18 and 19, we're talking about 17, maybe a normal thing. So notice that now we are trading at 32. So that's double what the number was, right? So again, the VIX is high. It's a high number, and therefore selling premium is going to be my preference today as I get into getting ready to prepare those trades. Okay, so I'm looking at the comments there. I forgot how to get to the UFO room. Mark, I just posted the link just a couple of messages above, which is stocktweets.com/r/UFO traders. So I guess that I'm going to post it again just in case it didn't go through. But you should be able to have it. And I'm also showing it on the main screen. So now everybody can see it. Christian, good morning. The website was Wiggy. Yes, we are having tremendous problems with the website. Unfortunately, it's not the first time I say that. And believe me, and I'm sure you too, but I cannot wait to have all that fixed. It has a lot to do with the changes that we're doing. We're changing a lot of technology from behind the scenes to prepare for the new website. and we are just finding many surprises with changes of technology which impact certain functionalities. And yeah, we it's not working well, unfortunately. Okay, but a little trick, if you wish, is to refresh the page. So once you log in and you come to the live page, refresh after you log in, and most of the time that does the trick to get you in the page with no problem. So I know it's not a very elegant fix, but if it works in the meantime, so I guess hopefully it's helpful. And beyond, hopefully we can have the new website release sooner than later, maybe a couple of weeks from now, something like that. We're getting closer, but there is a lot of fine tuning to be done. So anyway, the VIX is high, therefore focusing on selling premium is going to be one of my focuses today. When looking at the market and the climate, so now we are looking at the SPY. So from a climate point of view, so we are talking about a clearly confirmed climate to the downside. Obviously, being directional is the right thing to be done in this context because the market is confirmed, the climate is confirmed. But careful, we reached 4 out of 2. Okay, we reached 4 out of 2, which means that from a duration point of view, we surpassed what a normal duration is for a down climate in this market. And from a max distance point of view, we reached up to 126 at this time. Okay, 126, where two standard deviations of our definition of too far too fast is 1.02. So we have surpassed that, meaning that from a statistical point of view, this down climate is not supposed to be sustainable. Even though at the moment is a down climate, but statistics suggest so. So even though I'm going to add more details to this analysis, just because of what I said before with premiums being high, and now we are dealing with a climate which is not supposed to be sustainable, well, obviously, I guess you are guessing what I'm thinking in the back of my mind, which is I don't want to bet hard on being directional because, I mean, if I have done it a few days ago, 4 days ago, yeah, perfect. I could have caught, very nice move to the downside in some stocks out there. But doing it today, it's a bit late to the party. And I prefer to be non-directional using strategies that allow me to sell premium. And you're guessing it, iron condors would be my favorite in this case. And we're going to be looking at opportunities of that sort, okay? In any case, I do want to point at something as well which is relevant, which is for a while, all this period, we got the implied volatility of the puts above the implied volatility of the calls, the gray above the blue. But now, since a few days ago, okay, which is right here, so we got as an average the calls above the puts, and today it's kind of equalized as an average, okay? So while an equal value does not tell us anything, and actually if we look at the real time, the puts are actually above the calls, okay? Let me refresh this just in case. Yes, correct. So the puts are above the calls. So so there is a component of bearishness coming in today. Okay, when we look at the trading activity, we got 1.8 times more puts than calls, 2.9 times, 2.8 times, 1.7 times. So it does look like there is a bearish component coming in, which is in line with the climate. So I'm not surprised, but the fact that this equalized instead of clearly being in the favor of the put may suggest that buyers are coming in little by little, and the fact that the climate it's past what probabilities suggest a normal thing would be. So that's telling us that if the market this time turns and go blue, instead of having those tiny dots and back to red, tiny dots and back to red, so we may back to something more consistent like that. Okay, so something to watch. How are you, Ahmed? It's very good to see you, my friend. So something to watch for, because again, this would represent much juicier opportunities to catch moves to the upside in this case in a way that is more continuous. Okay. Yes, the weekly chart also suggests a downtrend, but again, if we look at all the time frames as we have commented in prior sessions, Christian, good point. Okay, I get you, my friend. I could certainly switch to weekly and look at it. Okay, but as we commented in the past, so in the weekly time frame, 8 out of 2 is also a situation where we stayed in that climate for too long. And in this case, the too far too fast was not met. 152 is less than 217, but we've been in this climate 4 times longer than what statistics would have suggested. So again, of course, there is a war happening, which is also something that make statistics, somehow meaningless or not, depending on how people are going to trade the markets. But certainly, it is a geopolitical event which could create a lot of chaos from a point of view of statistics not meaning as much as normal, on-field orders being cancelled. All sorts of things could happen when there is such an event going on. So we'll see, and we need to act with caution. The good news is that while all this craziness is happening out there in the markets and the world, well, that reflects in the premium values being inflated with a VIX of 30 plus, and therefore selling premium allow you to capture ranges of price movement which are relatively wide. And therefore, if the market is going to go crazy, typically your options play will absorb it, and then with the tweaks and the conversions, normally you can live through that, even if the market was to move against you. That's the beauty of high volatility conditions. Okay, not always, but definitely many cases of like that we have seen in the live sessions, isn't it? So definitely more than getting very directional or trying to predict by looking at too many time frames such as daily, weekly, monthly, whatever. So instead, in my mind, and also it has a lot to do with my trading style. So we all know that there are many ways on how to trade, and as long as you have a proper plan and you know what you're doing and you manage risk and emotions and everything else, so your plan, it's totally valid and maybe even better than mine, even if you have traded less longer than me, right? So there is no magic trading methodology out there, but from my experience and my trading style, I will say that when things are not clearly defined or things could become chaotic, well, the safe bet, within quotes, the safe bet is to play volatility more than play direction, because direction can go against you and you have a kind of like a very direct impact on losing money immediately if direction goes against you. Where when direction is less clearer, because now we have a contradiction with the climate and everything else, plus there is a war. So when direction is less clear, then playing the volatility and therefore trading price ranges is normally a safer bet. Okay, so you look at choppiness to decide on. No, I would not. If you mean choppiness as a study like we covered in the top session a few days ago, I don't, because it would be too many tools to use to plan a trade, and I like to keep it relatively simple. But certainly nothing wrong with this, as we discussed on the top session. It's certainly a valid indicator to comment on that. So yeah, also a very smart approach to trading. So anyway, so the conclusion of all of this is betting on direction, too late to the party on the way down, too soon to bet for up moves. It would be against what options data is telling us, and also against what the climate is telling us, even though statistics suggest the climate should reverse, but we haven't seen it yet. So we don't want to go against that aggressively. And then volatility being high, we're going to be focusing on iron condors. Okay, so that's the plan. Review of the positions. Okay, well, the FedEx trade is a trade that is over. Okay, so this is an iron condor that we had that didn't work well. We commented on that last week, so I won't make it long this time. Right here we go. But basically, we need to be in the purple area to end up in a profitable situation. And on Friday, I believe the market was trading right there. Okay, so this was Friday, which is clearly outside the purple area, and therefore this trade was a losing trade, and the trade is over because it expired on March 4. Okay, so goodbye FedEx, we are done, and the trade we still have running until March 11, which that's tomorrow, right? So that is WPM, which that one is a trade which is working well. So currently, the real-time P&L of this trade is $173. I would like to go ahead and graph it to understand what can we do, if any, to end up benefiting in any sort from this trade. Okay, so what do we have here? Okay, so this is the risk profile of this trade. Sorry guys, I didn't mean to make it that large. I wanted to float it. That's what I wanted, exactly. So this is the risk profile for this trade. Notice how that stock is moving away from the purple area. Again, this is not an iron condor. This is a double calendar, and having the stock move away from the zone is not necessarily bad, especially given all the management that we have done since a few weeks ago, where this trade, worst case for this trade, is to make the bottom part of this graph. The worst case for this trade is to make $76. This is the worst case. The best case for this trade is to make $176, where we are currently making 155. Okay, so that's where we're at. So, what can we do? Is there anything we can do to make this better? Do we just leave it alone? Do we close it now because tomorrow is the expiration date? What do we do? Well, remember, we are willing to expose ourselves to an earnings play. Now, if we had an earnings play, the best thing that would happen, which by the way, earnings are reported today after the market closes. Okay, the earnings are reported today after the market closes. So if that report produces a very impactful move on the stock, and the stock rallies a lot to the upside, so then instead of 155, you will end up making 176. But now the earning also could bring the stock down, and if the stock goes down, then instead of making 155, you would end up making $76, which is, let's call it half, if you wish. So the question is, do we close it and collect 155 and that's it? Or are we willing to risk half of 155 to make another $20? What do we do? What can we do? Let's talk about it, right? Well, first things first, okay, is look at the bid and the ask, where WPM is not the most liquid stock in the world, and you can see how the call we are long have currently a spread of $30. The put we purchased, which is so far out of the money, that put has a spread of 1 cent, but if you were to close it, basically you would sell it at $2, and therefore, you would basically, if you leave it alone and you let it expire, you're gonna lose $37, which is what you pay for it. If you close it now instead of 37, you're gonna lose 35. So in other words, there is not too much to be made by closing that one. And then the options that we sold, which are below, so the call, which is the one nearest to price, even though it's relatively near to price, we also have a spread of 30 cents. And the worst part is the put, which has a bid price of 0, meaning that no one is willing to buy it back. So if you wanna close it, you're gonna be the one willing to buy it back, but no one else. So notice the volume today has been 2 contracts only. So I'm doubtful that you're going to be able to go there somewhere in the middle of the spread, which is, let's call it 10 cents. But we got filled at 7. So if you exit at 10, actually you would lose money by closing it. So in other words, we are a little bit trapped in the sense that there is, and this, by the way, it's a normal thing to happen as the event of earnings is very close, as well as expiration is very close. So we are losing participants, and therefore liquidity worsens, and therefore the bid-ask spreads widen. So to me, the best choice here is to do nothing, because even if that stock rallies or drops, whatever that is, you will be automatically either auto exercise or assign, and therefore you will be out of the trade at no cost with commissions, and you will suffer no spread whatsoever, thanks to waiting until the expiration date. The downside of waiting to the expiration date is that you may end up with, instead of $155 profit, you may end up with 76. So that's a downside. But if you close the trade now, you also gonna suffer, 65 to 4 is like 30 cents, 60 to 5 is like 40 cents. So you're gonna lose like $40, $50 on slippage to exit the trade. Plus, given the fact that you may not even be able to close the puts. So again, you're gonna lose some money if you close it now. So my approach in a case like this, which happens many times when stocks that are average liquidity, and you are approaching earnings and you are approaching expiration date. So my approach is just to leave it alone, knowing that I cannot lose. Worst case, I'm gonna make 76. So that's it. I'm just gonna leave it alone. Okay. If you were to do that with stocks which are way more liquid, let's say Apple, for example. So yeah, normally now you can act on it. Okay. You can close the trade. Maybe you can close the puts, roll puts to a higher price point. things like that. You can do things that could be a bit fancier if you wish, and you could maybe spice up just a little bit of an extra P&L, in that 1 to 2 days to expiration that we have. But given the lack of liquidity on that stock, we are just going to leave it alone, and that's it. Okay, so ideally the earnings report comes up, as a motivation for buyers to kick in, and the stock rallies. So whenever the stock expires, the options expire on Friday. So we are above 45. The current price of the stock is 48.8. So as long as we are above 45, we're gonna make the full $175 in this trade, which I would say it's something relatively likely going to happen. I would say more likely than making 76. So we'll leave it there and enjoy the trade. Okay, so I don't have any additional comments to this. If you have any question, this would be your time, so we can start looking for a trade. Mark, under the current conditions, wouldn't you prefer shorter time trades too? Again, it really depends on your trading style. So if your trading style implies that you have a plan that allows you to trade different time frames and therefore trade short term, trade mid term, trade long term, so then I would say yes. But if because the market conditions happen to be more undefined because there is a war, next thing you know, you're going to start implementing a trading style that you never had just because you are concerned there is a war. So now you're basically improvising in your trading. You didn't have a plan for that. You didn't backtest. You didn't know what to expect. So again, improvisation. I'm not saying that's your case, Mark. I'm just making it as a generic comment. Improvisation is not welcome. So in my case, I am very active. I have multiple trading styles. I trade multiple assets apart from options too, and I got plays all over the place. Doing all sorts of things. So I'm there, right? But let's say you are a trader who maybe you have a job, you only have time to plan your trades. Let's say I'm going to be extreme here, only over the weekend, and you place your orders on Monday, and then you just let it be because you only have time to do that. So then you cannot do intraday, you cannot do shorter term. That's what you do. So still, you can still play the markets because again, when the markets become uncertain, volatilities will rise, and then you can play ranges. When the markets become more certain, volatilities will drop, so then you can be more directional. So this is the beauty of options. It's kind of like automatically it adapts to what's going on because the options prices are have implied volatility built in, which depends on how many people are buying or selling the options, and the people buying and selling the options have an implied expectation, which is part of the price. So you can sell them or buy them and kind of be automatically adapted, right? So no need to overthink, no need to force a trading style or trading plan just because next thing you know, there is a war happening. Let's face it, and I'm going to say something that hopefully you guys don't get it in a way that is politically incorrect, because believe me, I am extremely respectful of what's happening in Eastern Europe, and actually beyond respectful, I am in pain actually for what's happening. So I don't mean to sound unrespectful to this situation, but the reality is that there are many other wars happening in the planet at the same time, wars that maybe no one talks about, and it's just as sad. Of course, we don't have a power like Russia behind it, including the fact that they have nuclear weapons. And again, I don't want to make a long conversation here, but so it is indeed a different situation. But at the same time, wars are happening all the time. So again, as a trader, of course, you want to be human, but also as a trader, when it's time to trade, you want to wear that trading hat where you analyze the markets objectively with a very cold mindset. And in that sense, we trade all day long throughout the years in cases where there is a war or a risk of a war or kind of a war that then happen or doesn't happen or creates an expectation or doesn't create an expectation. And if you were to, every time something's going on, have to change your trading style, then I would say good luck. Okay, and I'm not saying this is what you're saying, Mark, but again, it's a great conversation to have to talk about this, because indeed, right now, there are reasons for big concerns out there on many levels. Commodities prices, my God, it's just crazy. And so, I get it that you may have this thought, but again, there are many other times where if you think last year, the pandemic, the year before, whatever, there is always something going on, right? So what's the beauty of options trading? The beauty of options trading is that when things get crazy, options prices get crazy, and now you can play selling options instead of buying options, and and vice versa. Okay, when you remember what happened when the markets got a bit quieter and we put this WPM trade, double diagonal, loaded on positive vega, right? And what happened? Volatility rised, and next thing you know, this trade has worked very well, and price have not even stayed in the purple area, right? Actually, we actually wish for price to be outside the purple area. I mean, as long as it's above 45, it's fine. Even if it's inside the purple area, fine. But if it's outside, fine too, right? So that's my point. That's the beauty of options. Okay, so no need to force changes of trading styles. Just let's use the tools. In this case, options. I'm mentioning options. I'm classifying options as a tool. Let's use the tools wisely. And if on top of that you choose to have multiple trading styles because you choose to be more active as a trader, is great, but just don't do it because there is a concern, because also a concern may be something totally subjective, because you may be concerned, but maybe there is no reason for concern, or maybe there is more reason for concern than what your concern is. Okay, anyway, uh, long conversation, as it often happens in the sessions where I sometimes get a little bit in the tangent, but at the same time it's all related and indeed very important. Anyway, so let's look for trades. Okay, so we're gonna be looking for options trades. So we want to sell options. So I'm gonna be looking for implied volatility mean to be greater than 80. That's how I'm gonna start. We are looking for stocks more than $38. No need to filter stocks based on strength or sectors. I'm going to load my list of penny increment options, which, by the way, you don't need to use those. Okay, there are many more opportunities if you don't use those. I'm just trying to be picky with the possibilities of negotiating the spread with a penny increment list. When it comes to strength, now yes, I want on the daily time frame neutral strength, and I want on the weekly time frame neutral strength. Okay, so I got check mark, neutral, neutral. Earnings, okay, for non-directional, we want to exclude anything that is going to happen in the next, let's say, 15 days. So we want at least 15 days in front of us with no earnings for those iron condors, ideally more. I mean, we could start with more too, but again, let's begin with 15. And then finally, auto climate, everything is on check as well. So when I scan this way, I end up with 4 symbols, and we're going to start there, okay? Mark, the war in Ukraine is sad and scary. It reminds me of the Cuban missile. Yes. Yes, indeed. The world doesn't need that, seriously. Come on, just a bit of peace, isn't it? The world has suffered so much, especially in the past years. And there are bigger problems for the planet as a whole, such as, global warming and things like that, countries have to fix. And if everybody's focused on a war, I cannot focus on other things, and that's obviously very problematic. So when looking at the Allstate Corporation, the first thing I notice is that we only got 2 vertical lines, which tells me that only monthly expiration dates are available, and that probably is going to make it a bit more difficult for me to have choices. So it doesn't mean it's a bad choice, but I'm going to leave it for the last. Caterpillar. Let's take a look at Caterpillar. Here we're going to have more expiration dates available with Caterpillar. We can also see we have some drawings here from a prior time where we did Iron Condor that work well, as you can see here. So let me remove everything. So we're gonna start fresh. Okay, we can see earnings for Caterpillar are happening on April 28th. So we could actually use expirations all the way to 4/4/22. Okay, now before I get too excited with CAT, let me take a look at the option chain. I'm just going to look at one strike, and I want to load expiration dates. What did I say was the earnings date? So we said 4/22. Okay, so yeah, so I want to load expirations all the way to 4/22. Here we go. And the reason why I want to do that is because while this is a very relevant company, I've seen cases in the past few months of serious lack of liquidity in certain strikes, and I wanted to double check that. In here we got a full $1, and here is pretty okay. This is pretty okay. Yeah, so it seems that certain expiration dates are not too good, but certain expiration dates look okay. I'm just looking at the bid-ask spread, okay? Then from a volume point of view, so some activity is happening. Okay, so I'm okay. I'm okay to continue with Caterpillar. Again, I had a bad experience not too long ago with planning a trade and then it was a no-go. So I just wanted to check that just in case, just before. Cool. Okay, so let's begin our plan. Okay, so we can use up to April 22, even though I've seen very bad liquidity. So I'm just gonna say up to April 14. That's gonna be my choice. And now, before we get started, I want to find out from a premium point of view. Okay, so if I load March 18, March 25, April 1st, April 8, April 14. Okay, so which are the expiration dates that provide a great amount of premium? And yeah, indeed, March 18, March 25. So everything looks normal. Like the nearest the expiration date, the greater the level of premium, the greater the implied volatility, I should say. So everything looks normal. But at the same time, you can see how the April 8 seems to be a little bit of a rebel one, where at least that particular strike seems to be a bit higher. So we may get a bit more volatility there. And certainly there is a huge drop after that. So I don't see any specific pattern that inspire me to use any expiration date instead of another one. So I'm just gonna use my spread select tool and build options for all expiration dates, because there is no expiration date that seems to be that appealing. Everything seems quite normal with the shorter expiration date having the greatest level of premium. So I'm just gonna check mark March 18, 25, April 8, April 1, 8, and 14. Okay, so up to 35 days. I am going to select with spread select that I want to build a short iron condor right there. I am going to be looking at minimum strike increment is 2.5, so I'll go for that. And maximum, this is a $200 stock, so I'll do 5 maximum. So we create roll risks of $500 maximum. More than that for a $200 stock, I would think is not acceptable. And then we're going to be using options filters. We're going to be loading our template for iron condors. Click OK. And now from there, we're just going to build 99 and sort to see if we get any pass. And yes, we do. And we have some passes using March 18. Okay, using March 18, we have some passes. So let's begin with March 18, which is right here. And let's find out what is our worst case, which is 227 and 198. Okay, so 227, 198. So we got 220, 23, 223, 228. Okay, we got 228 and 199. And I believe we said 198, right? So 227 and 198. So this is good, but the 199 is not. 228, 201, that's not good. 231, 201, that's not good. 228, yeah, that's not good. 228, 186. Wait a minute. This is March 25. So we are not looking at March 18 any longer. Okay, so March 18 seem to not to work. Almost, but it didn't. And by the way, when you see this type of situation where you almost got it, but it's not there, so it's a bit frustrating, and especially the days where you may not have too many opportunities, okay? Because there are times where you may have many opportunities and then it's not a problem. But what if you only had very few opportunities? Well, then what you could do is to just watch it, okay? To just watch it, and if later in the day the market was to crash a bit or something like that, so typically that will give you a spice to the volatility levels, and next thing you know, a trade that was almost good now is good. Okay, so we only spent 1 hour together, so I'm just gonna keep going. We're not gonna wait for this to happen, but just know, especially for the days when you have few opportunities available, that this is normally the way to fix it. So the next expiration date is 325, and therefore I'm looking at 232 and 193. Okay, so I'm looking at 232 and 193. So 233 and 186. This looks good. 66, 88, 61, 158. Pretty wide spread there. 108, 163. Okay, pretty widespread, but anyway, I'm gonna risk graph it so I have it. So we'll talk about it later. Is there any other one which is 230 something? 231 is there. Oh, this one fails. 234 and 196. This one seems to have a little bit better spreads. So I'm just gonna graph it, and we'll come back to this in a moment. And then coming down, 234, 198. Let me make sure I'm looking at this right, because for a moment I kind of forgot the lower values. So for this is March 25, 193. Wait a minute, that's 196, so that will not work. It's 193 and 186. That one does work. So 193, 232, 193. Sorry guys, I got confused for a moment. 231 is not good. 234, 198 is not good. 233, 199 almost. And then we're moving to April 1st. Okay, so let's move to April 1st. I'm just picking all my choices first. Back up, sort. Okay, and now with April 1st, so we are looking at April 1st right here. We are looking at 236 and 189. Okay, 236, 189. So 236, 236, 189, that's not good. 237, 132. That is good, but that's too good to be true. Meaning that there is no bid price, so no liquidity there, that was my concern earlier. 250 something, 133. Yeah, we have missing bids. Yeah, not happy about that. So let's check April 8. I'm going to skip April 1st. We don't have anything which is good enough. Okay, so let me go back up, sort again, and I see you guys are typing on the chat box, so coming back to you in just a moment. So April 8 is right here, and on April 8 we are talking about 241, 186. Okay, so 241, 186. So 242 and 186. Okay, missing bid 246. Okay, yeah, so yeah, a lot of missing bid, as you can see, a lot of missing bid, and that is telling me about potential lack of liquidity. 236, 183, 2, and I said on the top it's 241, so that's not good. Yeah, the ones that got bids, they are not providing the values that we need. Okay, so I'm just going to stop it here just to also manage the amount of time we are spending to plan the trade, so hopefully we can find a second trade as well. And I'm going to analyze this trade with Caterpillar using March 25 expiration. This is like a 2-week type of iron condor. So 67 to 88, we got some trading going on today for contracts. It's not a lot, but at least someone is trading that. 61 to 158, this is concerning. No volume today with a 187.5. So this is not ideal when that's happening. But at the same time, I'm not too concerned about it in the sense that when that's the case, often, precisely because there's been no volume, you place an order in the midpoint, and next thing you know, you get filled quickly because the market makers are waiting for some activity which hasn't happened in the whole day. So I'm not that concerned. Okay, even though of course it would be better to have some more volume here. 114 to 157. So we got some trading going on. It's not super wide, but it's definitely not narrow. And 87 and 106. So my conclusion here is that this is tradable, but when executing this trade, you have to be super patient and super demanding with how much you're gonna get when you get filled on the trade. Okay, don't take this trade and hope for the best. If you get into this trade, you gotta make sure you get paid fairly. In this case, we're shooting for 79 cents. Okay, so sorry, 69 cents. 69 cents of premium. Okay, 69 cents of premium out of a raw risk of 250, right? Which is the difference between, sorry guys, out of a raw risk of 250. This is actually 69 divided 250. Okay, that's better. So this is a 27% return on the trade. Our minimum, as you as you know, based on the rules that we use, is 15. So certainly the premium collected is fine, but it's only fine if you negotiate well your entry. Meaning that I would have no problem to place this order, and if I don't get filled in the whole day, so be it. Okay. Now, for us for practice purposes, I'm just gonna get filled, and if I need to use a market price, I'll do it just so I get filled, even if I get a terrible price. If I use a market price, I will only get 22 cents. That would be crazy. Don't do that, please. But if I need to do it, I'll do it so I can demonstrate the management of the trade in future sessions and so on, which is, as you know, key. But for you guys, just make sure that you are patient, because liquidity, it's not the best. Now, while liquidity is not the best, the trade does provide what we need from all the parameters that we have in the template, in here with the Iron Condor preferred parameters. All the parameters are being met, and therefore the trade is what we need. So the only thing that we need to validate now to see if we're going to take the trade or not is to look at this particular date and look at the extreme of the probability cone, and with that extreme of the probability cone, now drop to the intraday time frame to see if we have UFOs that, if price was to try to move away from the midpoint, let's see if those UFOs, okay, would be in positions such as positions where those UFOs may stop price from keep moving. Okay, so on the upper part, indeed, okay, we got 1, 2, 3, 4 multiple UFOs. They are all 50%, so we need 48 or more, so that's good. On the bottom part, really, to get to 2 UFOs below, okay, we need to come here. Okay, we need to come here. Okay, so and since we got this group of 3, if you don't mind, I'm just gonna come in here and just use all this. So in other words, I'm giving this extra space, right, from 193 point something to 188 point something. There is like a $5 window where, if this market, which is currently between UFOs, was to fall and fall and fall and go below the red line, which this triggers multiple trading actions, isn't it, from a point of view of butterflying the Iron Condor and so on. So if all of this is happening, of course we're going to act on it, but also the fact that price coming here maximizes the probability of price coming back higher inside the range, because we have multiple UFOs here, right? So we want that, and therefore this kind of like $5 range is something I would also like to find. Sorry guys, I just draw a line instead of dragging the chart, silly me. I would like to find something similar. Okay, so we are talking about 234. If I go to 239, it's also kind of like $5. So it's kind of like pretty well centered. Okay, if I draw my purple line here above, and now I go back to the daily time frame, notice how I have at least 2 UFOs below, at least 2 UFOs above. And if I go back to the daily time frame, let me make this a little larger. Okay, so if I go back to the daily time frame, so we are talking about a ideal area, okay, to be from here to here. Okay, that's the ideal area. Knowing that if price goes below and then comes back up, we are back in business. If price goes above the red line and comes back down, we are back in business, and that is likely going to happen because that area between the two lines above and below have additional UFOs that potentially will bring price back inside. Our break-even points, if we do this trade at 62 cents, would be 233 and 186. So 233 is the profitability area, okay, which is interesting. Okay, here we go. So 233. Okay, I'm not sure what's happening on my end right now. So 233 is somewhere here. So the red line, happens to be um, the break-even point as well. Premium was 69 earlier. Now it dropped to 62. That's why it's kind of like lining up perfectly now. And on the below part, how much I said? 188. Did I say 188? 186. So 186, it's all the way here. Okay, so actually on the below part, in this case, given the selection of options that we have in this play, actually the profitability would take place all the way to below the purple zone. Ideally, we want to stay in the purple area, but actually in this case, we have an extra because the location of those options are quite far, which is one of the reasons why also the spread is wider. Okay, but again, the other strikes didn't meet our conditions from the template. So you may say, can I move the options higher? I mean, you could do anything you want, but then you will not be meeting those conditions, and we have reasons to have those conditions, right? So therefore, this is the trade that we want to have. Okay, so yeah, so the trade is valid. We got the UFOs, we got the range, we got the whole thing. So I'm just going to go ahead and place the order. We're gonna move to CAT. We are looking at March 25 expiration. So a 15-day iron condor. And then on the call side, we are doing 35 and 32 and a half. So 35 and 32 and a half. And on the put side, we are doing 187 and a half and 185. 187 and a half and 185. So this is our condor. Here it shows that it may give us 76. Real time with top suggests around 60. So I'm just gonna go with 60 and see if I get 60. Okay, and see if I get that. So we'll wait and see. And again, if I don't get filled before the end of the session, I'll just push it so I get filled so I can demonstrate this trade in future sessions. Okay, but please let me know if you have any question. So we can discuss it together. Jeff was asking how to look at the skew. Well, we have a tool here on the left. It's called skew. So you just click skew, and then the tool pops up. So then you just select the expiration dates you are looking for to understand. Okay, and here you get to see two things. Actually, you get to see multiple things. So first of all, what I'm looking at now is calls. You can also look at puts, which is the same with dotted lines. Okay? And you can also look at calls and puts. Okay, so now you have solid and dotted lines all together, and every expiration date, which could be changed using the drop-down menu, has a color. Okay, so what you want to see, it's ideally you want to see a pattern, okay, where certain expirations are clearly above those expirations, because the vertical axis here is volatility. Okay, so this is 40% volatility. Oh, sorry for that, guys. 40% volatility, 42% volatility, 45% volatility. Okay, so this is a volatility thing, what you can see here. Okay, so the higher this graph is, for example, the red graph is benefiting from higher volatility built in those options. So the options that belong to that expiration date, which in this case is March 18, are more expensive compared to other options. Okay, so you will want to use that. Now, of course, we know that in most cases, the nearest expiration date, is being seen as the one with the greatest uncertainty or risk, because it's expiration is right there and anything could happen and who knows. So in that sense, volatility tends to be the highest in the front week. So ideally, you want one of those guys in the bottom part to be clearly above. And one of the guys in the bottom, ideally, is maybe a further expiration date, April 14, which in this case happens to be all the way in the bottom, but ideally you have it somewhere here. So now you can use a further expiration date, lock in more premium for longer time, and if something happens to the trade, so you can tweak knowing that you have a greater advantage thanks to a greater level of premium, which also allows you for a wider range. So that's perfect. Okay, that's perfect. But in this case, it was not the case. In this case, like you had a normal distribution where the shorter expiration day was above, and the next one was below, and the next one below that one, and the next one below the one, and yeah. So that's why when I went to use the spread select tool, I just used all the expiration date all the way to April 14. Even though then I started sensing lack of liquidity and I stopped there. Okay? So I'm not being filled on the simulated account. And this, by the way, guys, tells you that on the real account, it's not going to be so easy to get filled. There is lack of liquidity, as we saw. But again, be patient, because you may be surprised before the end of the day you get filled at a good price, all the way in the middle of the spread or something like that, because those market makers didn't execute any trade and they need the trade, so they may end up give it to you. Okay, so keep trying, be patient. Okay, and if you don't get filled, just give up on it. Okay, don't force the trade for a low premium. Okay, that would not be a good thing to do. So I just lower it to 50 cents. It's not getting filled. We are 5 minutes away from the end of the session, so I just want to push this to a market order and see if I get filled. Again, the simulated tool I'm using will try to emulate market conditions. So even though I'm using a market order, if there is no trading happening at all, it may take a while for me to get filled in that market order, where in the real market you will get filled immediately. Now, a market order will give me 22 cents, as you saw earlier. Okay, so please don't do that. Okay, because that would be quite bad. So yeah, 52 cents seem to be the value now. 18 cents is what I would get with a market order. Okay, I mean, still okay. Still, I guess, still provide 52 cents. We still provide more than 15%, which is our minimum. So the trade is indeed valid, but yeah, not ideal. You got an order at 70 cents. Very good. Very good. So let's be patient there, Mark. You may get filled before the end of the day. And if you don't, maybe you try 65 or 60 if you are open to negotiate a bit, but do not lower it too much, okay? Because it doesn't make sense, okay? And there are more trades to be taken as well, okay? So yeah, so I'm just eager and willing to get this filled so I can report it properly here in the positions tab and get it in there so we can track this trade in future sessions. So guys, we got less than 3 minutes for the end, so I'm not going to be looking for another trade. How is it going, guys? If I was to ask you, I leave you alone, can you find an iron condor using the matrix, the charts, the probability cone, the spread select, the risk graph? How is it going? What would your answer be to that? How is it going from the use of the tools, from understanding what I'm doing, what I'm looking for? Any question, let me know, because in the end, my ultimate goal here, if not my only goal really, it's that you guys learn a process where you can find trades on your own, so you don't depend on me. I'm happy to meet with you and always enjoying very much the sessions, but ultimately what I want you guys is to be self-sufficient, right? So you did a trade on CAT yesterday using top. Wonderful, Joe. That's great to hear. Very good. So I'm just waiting in case you guys are typing in the chat box. Yeah, doesn't seem I'm getting filled, not even with a market order. This is gonna make it difficult for you to get filled, okay? Yes, Christian, I agree. I am a little bit of a perfectionist, and therefore sometimes I add a bit of a few extra steps that could be eliminated. Okay, and so definitely I am with you that there is tool to reduce complexity. Also, there is room for us to keep working on the platform and the technology to keep adding more elements that make it easier to use and everything else. And we'll be on top of all of that, and that's for sure. Okay. Also, by the way, if you guys to be honest, I never said it, but that would be so much fun. Okay, if some of you at any point in the future would like that we do a special session where instead of I'm the one sharing the screen, you are the one sharing the screen, and we go over your process and how you do it. I'm more than happy to do that. Shoot me an email if you would be interested, and maybe we can have a short meeting, you and I, just to discuss it and get organized. And so I can brief you on what is it that you need on your computer, so I can get you live on the channel, on the page, and everything else. So you know how it works in case you have never done a live stream or things like that. But certainly more than happy to invite you guys, and instead of I'm the one sharing the screen, you share the screen, or maybe we both share the screen at the same time, because we can do all of this and more. Okay, so if you are interested, or you feel this would be fun, just let me know, guys. That would be something I would really enjoy so much. Ahmed, this market is crazy because of the war. It scared me to trade live. I get you, and you know what, the good news is that the market will always be there. So if there is a moment in time where you're losing confidence because of what's happening, it's creating concern, then stop trading. Okay. In the other hand, I will also say that craziness, premiums rising, market moving fast, volatility is also a source of opportunity, right? But in the end, that opportunity comes with the cost of a little bit of a scare, if you wish. So unless you have been trading for a while, or maybe you are very conservative as a person, and that's absolutely fine. So then maybe you feel like I should stop trading for a while and let things define themselves. Of course, the price to pay is that you may miss some opportunities, but the benefit is also that you may avoid some scary times, maybe some losses, and so it's all good. Trading every day is fine. Trading once a week is fine. Stop trading for 2 weeks or 2 months because you went on vacation, or because there is a war and you want to see the market define itself, is also fine. Okay, so no, not an issue to do that. Options volume map. I'm not sure what you guys mean by that. Both Joe and Mark say options volume map. I'm not sure why you guys said that. Probably because of something I said myself, but now I'm not sure. Oh, the options volume map, the OVM. Okay. Got you. Got you. Thanks for that. I get you now. I was just reading back up on the chat box. Cool. Hey, a pleasure as always. I'm gonna try to keep working on this trade, and hopefully I get filled before the end of the day, because I want this trade. If not, so worst case, look, this is what I'm gonna do just in case I don't get filled. So in case I don't get filled, I'm gonna pretend I got filled at the worst price possible, which is 0.86 for that one, 0.61 for that one, which that would be crazy. That means that you actually lose money on that. You sold that one at less than the one you buy. So this is something I would never do, but let's say it did. 1.13 for this one, and 0.99 for that one. This should give me the 0.17 cents. 0.11. Oh, okay, that's a debit. Okay. Okay. Yeah, that would be crazy. Okay. So look, 0.67. Let's do this. 0.67, 61, 114, and 0.90. Oh, I just sorry guys. 0.67, 0.61, 1.13, and 0.90. This should be 18 cents, 17 cents. Okay, so let's say I got filled at 17 cents, which would be absolutely terrible. I'm just gonna copy this position to the clipboard, and I'm just gonna put it in here. so we can follow up on the position and talk about management and everything that needs to be done. Pretending that we got into this trade in case I don't get filled. If I get filled, I will substitute this trade and put there the real prices that I got in the simulated account, which very likely would be much better than that, because that would be a terrible trade to take. Don't ever take a trade like that, okay? But again, for practice purposes, indeed, this is what I would like to do. So this is where we got in, okay? And all is now documented on the screen. So we are ready to say goodbye, my friends. Thank you for joining me as always. Hope you guys are enjoying the markets, enjoying trading, enjoying top, enjoying the sessions, enjoying Josip as well, and everything else we do, guys. Any feedback, as always, more than welcome. I always have news for you guys. I wanted to say that we are gonna soon release an update of top. That is taking care of some minor tweaks and things. One of them that have to do with the risk graph, with the risk amount that shows on the right side of the screen. So we are working really, really, really hard to come up with a different way to come up with those calculations that does not confuse anyone, which was very confusing and very difficult to fix as well. But we are on it, and we're gonna have that. Okay, so just keep an eye for one of these days. It's probably going to be next week. Okay, not this week, but one of these days, not too long from now, you can have an update taking care of that, as well as the SPX weekly options, working on the top version that connects with TradeStation, where there was a problem with the symbology that TradeStation uses, where they have two different symbols for the S&P index, and that was confusing our platform. So anyway, you guys take care. See you soon. As always, lots of fun. I love joining you guys. Thank you for joining me. See you on the next one. Bye-bye.